Tom, we've seen some changes in the swaps market with regard to expectations for future rate cuts, at least in terms of magnitude. How does that alter the calculus, if at all, for the equity markets? If it is now looking more like a 25 basis point cut in November instead of 50 basis points in those weightings changing, does that impact expectations in the equity market, or that's not really priced in at this point in time?
Well, we know that Fed fund futures and expectations about the magnitude of cuts over the next couple of meetings does affect the bond market. And we're seeing that reaction today. And, of course, I'm even seeing some folks think the Fed made a mistake with 50. But for the stock market, I think what matters more is really the Fed. The Fed is actually in an easing cycle, and we're making our way towards neutral. And so I think that there is going to be times where the stock market, where the S&P is going to rise even if yields are up. I think we're in an instant there because yields can be rising because the economic data is better, and so we're kind of rising for good reasons on yields, and I think that's supportive of stock. So I'm not too bothered if the odds of a 50 have dropped today because of a good jobs report, because I don't think it means the Fed is suddenly backpedaling and back to hiking mode.
Tom Lee from Fundstrat Global Advisors discusses market dynamics following a strong jobs report and a VIX close to 20. He views the positive stock market response as encouraging, indicating economic resilience despite lingering geopolitical risk. The VIX's elevated level, however, suggests volatility may persist, limiting a clear path to a strong year-end rally. Lee's technical strategist predicts a market low, setting the stage for potential highs next week, depending on CPI data and rate cut expectations. Regarding interest rates, Lee explains that lower projections for Fed rate cuts are weighing on bonds but might not dampen stocks due to optimism around the Fed's overall easing stance. With rising yields potentially reflecting better economic data, he believes stocks, particularly in tech, could thrive. Lee highlights China's recent economic interventions as a boost for global growth and sees excess cash on the sidelines as supportive of U.S. equities. Lee is especially bullish on tech, noting AI-driven demand and investment trends. He anticipates robust gains for companies like Microsoft, Amazon, and Google, positioning tech stocks for further growth. His view is that Nvidia will likely continue its market dominance despite emerging competitors, while other semiconductor companies like Broadcom and new IPOs offer alternative growth avenues.
What do we make of the market in light of the jobs number and a VIX, which I know you're watching, but is still close to 20 today?
Yes. I think we're in a tricky period because there are these sort of complications, which is geopolitical risk. We've got the port strike out of the way, and I know October has these seasonals. I think it's very good news to see the stock market react positively to a jobs report, because it is, in fact, a good report showing the economy is actually not only holding up, but the unemployment rate's down. But I agree with you. The VIX is important to tell us how much we could rally. I know our head of technical strategy, Mark Newton, thinks that we're making intraday lows today, and it's setting up for us to make new highs next week. To me, that makes sense just because it has been a resilient economy, and then next week we get CPI. But I do think it's hard to say this is a green light into year end because, as you're pointing out, the VIX is just staying stubbornly high.
Everybody that you come in contact with, and I mean everybody, says to you, oh, you're in the investment business, what do you think about Nvidia? And they're people who have no idea what Nvidia is.
I feel don't you feel like that's cooled down a little bit?
Yes, but that's good. That is healthier for the market. It's
Fervor
like
about
saying
all that
GameStop. It's like we should all own GameStop because we heard it from the person cutting our hair. I don't think so. So it's the same dynamic. You have to have something broader, and the professionals who are buying these stocks, we know the companies we're buying. It's not just the S&P index that's moving higher. It's other buying in addition to it.
I'm not suggesting we're not going to have Nvidia earnings watch parties anymore because they're still going to be a thing, but it does feel like a little bit of the fervor about that has cooled a bit, which is good. You make the argument that's good. Now, outside of the mega caps, you do have the filing of an IPO by a chip maker. It's Cerebras. Maybe they'll take on Nvidia. The latest funding round valued that company $4 billion. Backers include Sam Altman, Coatue, Altimeter, Benchmark, plans to go public in the NASDAQ. I don't know. B of A today says the highest owned semis still are relatively underweight, if you want to believe that. Steph, what do you make of that? that the highest owned semis are still relatively underweight.
I know I am.
Well, yeah, but that's what happens when you're at 8% of the S&P, or 6%, 6.5% with Nvidia and whatever it is, 2% with Broadcom. That's 10% in two names, close to. I mean, you can't be overweight. Otherwise, you only have 6 stocks in your portfolio.
So that's not. That stat is not telling of
not relevant.
An opportunity that exists. Yeah. That's how it's being painted.
Yeah,
I think it's interesting, actually. I mean, I've been adding to Broadcom and Lam Research on the kind of the declines, if you will. They're volatile stocks. You get a look every once in a while, right? So I think that Broadcom, to me, is just the one that I wanted to bet on versus Nvidia. I mean, I'm still up quite a bit in it. It hasn't done as well, but I think you can still make a lot of money. I mean, why I like Broadcom only because that their AI business certainly is growing 3 to 4-fold, right? But they also have VMware, and that actually changes the story completely in terms of software, in terms of margins and free cash flow. And so to me, that's the one I'm betting on. But I kind of like the fact that if that is in fact true, that people are underweight semis, that's not a bad sign.
Well, it's mostly because they're underweight Nvidia, and it's like saying people are underweight Apple. Almost everybody is, or underweight Microsoft, because again, very, very high. I get that, but if you added up everything, what would it be now? I don't know, 14% of the S&P? I don't know. It's a big number. It's hard to be overweight.
I know it's too soon for you to talk about this company specifically, but at least it raises the issue of companies that are out there that want a piece of this AI pie. How should we be thinking about these newcomers relative to the heavyweights like Nvidia?
Yeah. So there's a number of areas of competition for Nvidia, which makes sense. It's an enormous potential opportunity, and all the dollars right now are flowing to Nvidia. And you've got other merchant suppliers like AMD or even Intel. You have hyperscalers doing their own products, and then you have startups as well, right? And I think for a lot of the startups, it's difficult. They don't have scale. They don't have ecosystem, and if their pitch is, we have a chip that's better than Nvidia, I think that's hard because, with every generation, Nvidia has a chip that's better than Nvidia, and they have the software and all the ecosystem support that goes with it. So, I'm not going to comment on Cerebras, but they're doing some other things. I mean, clearly, they're gonna try their best at this point. But in general, so far it's been a winner take all. And I've said this before, it seems like it's Nvidia's game to lose, like more broadly.
Well, I mean, it's winner take most, right? I mean, it's not like Broadcom hasn't done well. No. The issue, though, is that, as it's done better, its multiple's gone up, hasn't it? So it's not as cheap as it was viewed to be before.
On China, Tom, is it good for global growth? But how is it offset, if at all, by any kind of drains to liquidity or just the rush of hot money to either cover shorts over there or try to play along with this?
I think on balance, it's very good news that China's PBOC and the government have launched a bazooka series of measures because it has been, on a relative basis, a drag not only on the global economy, but a huge underperformer for the past 10 years. I don't think U.S. investors are selling their U.S. equities or even small cap stocks to buy China. I think it's coming out of all this cash on the sidelines. We know margin debt hasn't moved for 4 months, and it's still way below the 2021 highs of $936 billion. And we know there's $6 trillion cash on the sidelines. So I think this is motivating money into action, but it's overall, I think, a positive.
Back?
I mean, I just got back from Asia, second trip in the last 6 weeks. It's more firm. I'm actually more incrementally more bullish because of everything we're seeing in terms of chip demand, the use cases that are ultimately driving AI, and the hyperscale. I mean, to Microsoft, I believe this is actually just the next leg in Microsoft. I think numbers go up much higher for 2025. Just given our view, the AI revolution, we're in the early days, and I think it's a risk-on environment for tech going into year-end.
Why has the chip trade been so squirrely then?
I think concerns about ultimately is demand softening, but that's why we spend so much time in Asia. We think demand's outstripping supply 15-1, and it speaks to the bullishness not just on Godfather of AI, Jensen, Nvidia, but it just when you look at overall, the hyperscalers, it's Microsoft, it's Amazon, it's Google. That's the foundation that's now what I view as the second, third, fourth derivative. That's why names like Palantir front and center in terms of the use case names, where I think many institutions kind of put it by the side. Now it's front and center.
And you think there's enough that's not in the stocks? Because a lot of what we're talking about is known. It's expected at this point, and that's why the valuations and the prices have been bid up.
I mean, in our opinion, I believe Street's underestimating numbers across the board in tech, 15 to 20% when you look out the next 2 to 3 years. And that's, that's really our thesis, is that as these use cases build out, you only have 3% enterprise that have actually gone down the AI path. You have $1 trillion of AI CapEx coming. And Scott, I see it feet on the ground in Asia. And that's why I get it, the bears come out of hibernation mode and, try to scare many. But I think when I look at tech, I believe this is a tech market that goes up another 15, 20% going into the next 3 to 4 months.
He's too bullish or no?
So people were saying he was too bullish last year, and here's what's happened over the last year. Nvidia is the second best performer in the market, up 167%. People at the start of this year in January, they said, okay, now they're going to rotate away from the AI darlings. We're going to do something else. It's 8 months later. Guess what? The #1 performing stock of the year is. Nvidia is tied with Vista Corp. They're both up 136%. So at a certain point, Nvidia can't be up 136% every single year. But this idea that we're all going to be smart enough to know when this is it, this is the top, and it's time to rotate out, it continues to fool people, and Nvidia continues to stay bid.
Tom Lee from Fundstrat is optimistic about the market's resilience, seeing strength in the economy and positive job data. Despite high VIX levels, he expects stocks to rally if CPI data aligns, with China's recent economic moves and the Fed's easing stance adding potential support. Lee is particularly bullish on AI and tech stocks, highlighting companies like Nvidia and Microsoft due to growing demand. He views Nvidia's strong position as unmatched, despite new competition, and expects significant gains for tech in the months ahead. Do you agree with Lee's positive outlook on tech stocks despite volatility? How do you think China's economic policies will impact global markets soon?